Hello and welcome to the FNO show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Darshan Mehta. Good morning, Agam.
Good morning, Darshan. I'm Agam Akil. Here are the top headlines of this hour. Indian markets are among the top gainers in Asia today. Volatility also declines. And open interest surges in Castrol India as traders take fresh long positions in its stock futures. Wipro is among the top gainers on the Nifty after the tech giant said its board is going to consider a bonus issue this week. And a higher ad revenue is expected to help Zee Entertainment post a good set of numbers in the third quarter.
Okay, let's see what the markets are doing at this point of time. Pretty stable as far as the Nifty is concerned. What we can look currently is the fact that I think there's some issue with my page, but I'll just get to the Nifty. The Nifty is up almost 80 points at this point of time. There is enough traction that's happening on the Bank Nifty also, so that's the move that we are seeing at this point of time. I think there's some technical.
In that there, Darshan, what we're seeing is about 2.8% change in open interest as far as the Nifty Bank is concerned, and okay, of course that's changed a little. So so the boards for that.
Yeah, so that's about it. Let's pull up the where the positions are being built as far as the OI is concerned. You can see that today put writers are much more active in trade since the market is looking slightly stronger. So at 10,700 to 10,900 is where put writers are active. Call writers had to shed positions at higher level. And if you take a look at the open interest to build up overall where the positions taken, 11,000 seems to be the big resistance that the market is looking at. Agam, stock specific wise, what are you seeing?
So we've mentioned Castrol India in our heads, and of course that's right at the top. And do remember the Castrol India has seen a lot of strength, not just today but over the past couple of sessions. We're seeing a good traction coming in there. DCB Bank, of course, is where the OI has surged by as much as 22%. Its underlying hasn't advanced as much, but it is still up and about by as much as 1.5%. Godrej Industries is one of the unusual ones to show up in the list when it comes to accumulation in OI, but and its underlying isn't advancing by more than 1% right now. NIT Tech is another important factor, counter to watch out for, considering the mid-cap earnings around the corner. NIT Tech along with Mindtree, of course, which is why we're seeing significant addition in positions being taken as far as these two mid-cap IT companies go. Let's take a look at those counters which are seeing unwinding. CESC, again, a very active counter these days, underlying not doing much. Infi is looking at a bout of unwinding, short covering, if I can call it that. It continues to move from strength to strength after the management upped its FY19 guidance. Amara Raja Batteries looking at unwinding too. Jet Airways seeing significant unwinding. Do remember Jet Airways is in the FNO ban, and we're going to have to wait and watch whether or not it does eventually move out, but it is looking at a lot of strength at this point. And Yes Bank, again, another stock. It's moved above the mark of 200 rupees per share. In fact, it's very strong, and there is some short covering of the old also happening in this stock. So a whole lot of counters to keep an eye on, especially in the ones which are seeing unwinding today, Darshan.
Okay, so let's take a look at the stocks that we will be discussing in trade today. Yes Bank is about the 200 mark, so that is something that we want to discuss. Apollo Hospitals continues to gain on high open interest build-up. Motherson Sumi Kotak came out with a cautious note on the counter. Castrol is doing well in trade. It's one of the buzzing stocks. DCB Bank, fresh buying seen on the counter. And NIT Tech, OI accumulation seen ahead of the numbers. So those are the stocks that we need to discuss. Before we get in our show, here's the reminder: if you have any of the queries or regarding any of the stocks that I just spoke about or the benchmark indices, you can call us on 022454044141 or write to us on Twitter, Facebook with the AskBQ hashtag. Let's welcome our FNO experts for the day. Amit Shah of BobCaps joins us in the studio. Nirav Chedda of Nirmal Bang Securities also joins us on the show. Good morning, Amit. I'll start with you. What's your view on the Nifty? A strong start today, but overall, what are you advising clients?
So well, it's been 10 weeks where we have been trading in a range where on the downside 10,450 has been tested multiple times, and on the upside we are facing a stiff resistance around 10,950 to 11,000 close to band. So close to 10 weeks, and currently right now it is forming a kind of a triangle formation, so still more or less a sideways. I'll still maintain a cautiously positive stance on the market considering the development on the option writing what we have seen. If you see 10,700 strike has been slightly inching closer, though the maximum OI still remains at 10,500 on the put side. But it would be more of a wait and watch. On the upside, till the time 850, 900 is not decisively closed and sustained above that on a weekly closing basis, I feel this sideways activity can continue for maybe another few days. Above 850 this time, I feel on a sustained basis, there can be a possibility of again retesting on 11,000 mark. And on the downside, 750, 700, where the 50-day and the 200-day moving averages are seen, should act as a key support for this supportive action for the market to test towards 11,000 odd mark. So I don't have any strategy considering it's in a triangle formation where a make or a break is possible in any time within a couple of days. So it is in a time-wise, the consolidation is likely to end, but we need to have some kind of confirmation whether the breakout is happening on the higher side or on the lower side.
And what are the levels for which this breakout can happen on the higher side?
So 700 would be my trigger on the downside.
Okay, 10,700.
10,700 would be my trigger on the downside, and on the upside, 10,850, 950 are the two resistances which I am closely.
It's already above
looking
850. So on a closing basis,
I'm looking at the spot level at this point of time.
okay.
Okay, well, moving on. Nirav, good morning to you as well. What is your view? You have a very interesting strategy here, but let's just talk about your view here and what you're doing with that.
Yeah, good morning, Agam and Darshan. Even I feel this consolidation has taken a long time, and probably till this interim budget announcement, we might just see this consolidation go on. So looking at the other parameters, there's been good built up of puts at 10,500 and 10,700 strike puts, and at 10,800 and about 11,000 calls. So Nifty is in a range of about broadly 10,500 on the downside and about 10,900 on the upside. I don't think this range will be broken out in this month. Probably at the start of the next month. So the strategy here would be to play in this range. From the last 2-3 weeks, there has been no strategy that is really working on the long or the short side. So best is you go with a 4-leg strategy where you just eat the premiums.
Okay, so Nirav, why don't you just take us through your strategy and perhaps explain it? Now, from what I understand, you're playing a box spread. If you can actually just take us through why you're playing this and also explain it and perhaps elaborate a little more here.
Yeah. See, when your view is, a range-bound market, when you feel, the market might just end up at the expiry near the same levels where it is trading, I feel it will be in between 10,650 and 10,850. So again, 10,950. So, the 300-point range I want to play. How do I play that? Just selling a straddle will be a little riskier in case a breakout or a breakdown comes. I want a less risky strategy where I can make good amount of profit, but the risk is very less, and that is why one goes for such a strategy where you can sell the 10,800 call and put which was at the money. You can buy the 10,950 call on the upside and buy the 10,650 put on the downside. So again, you're hedged. Wherever the market goes, even in case there is a breakout or a breakdown, your maximum loss is only about 27 points here, and your maximum profit you stand to gain is about 120 odd points. So you're playing in that range. If market ends up anywhere in between 10,680 and about 10,920, you stand to gain.
So I'm going to break this strategy down for what Nirav just suggested. It's actually a combination of a straddle and a strangle. So what Nirav is actually doing is that he's selling a 10,800 straddle, which means he's selling the 10,800 call and the 10,800 put, which will of course get the benefit of perhaps your volatility coming off and your option premiums coming off. On the other hand, where if Nirav says that should we see a breakout on either side, side. In that case, you going along on a strangle of 10,650 put and a 10,950 call would actually be something which will be beneficial. Now, overall, he's clearly hedging his bets both towards the increase and decrease in volatility. It's a slightly complicated strategy, but if you actually separate them into two different strategies, then it can simplify. Nirav, just one more question on this one. Firstly, if you can tell me if I've got this, if I've been able to simplify the strategy correctly. And secondly, your exit on the strategy would be at the same time for all the options?
Yes, you got it bang on actually on both parts. Yes, the strategy exit has to be at one time, all four legs have to be closed at the same time. And yes, you simplified it for the audience.
Okay, let's now get stock specific strategies. Nirav, you only go first. Stock specific wise, what do you like?
Yeah, see, from the last few weeks, I have been saying this, Tata Motors to me looks like it has bottomed out. For me, I don't think, it will now go down below the 165 odd levels. I feel it can go up towards the 220, 230 odd levels. So even for trading, one can buy at current levels with a stop loss of 176. 178 is a very good support area on the downside. So I don't think that will be broken for a trading perspective as well. Good open interest built up in this, volumes are really back into this counter. So I believe it can actually move up. The target for, trading will be around 195. Secondly, I feel the metal counters are witnessing a lot of selling pressure, a lot of shorts which have been built up in the counters like Tata Steel, JSW Steel, Jindal Steel and the likes. So I think, JSW Steel in this, the whole pack looks like it is going to break down further. So one can go ahead and sell JSW Steel future. I believe it can come down towards 275. You can keep a stop loss of about 293 for your shorts.
Okay, so those are Nirav's calls. Amit, what about you? What stocks are you betting on today?
So considering the rollovers, there has been strong rollovers which was seen during the December expiry in UPL. The stock has seen a good consolidation over a period of a few weeks down the line in the range of close to 780 to 740 odd band.
Right.
And if you see now, looking at the broader structure, it looks like it is out of this consolidation phase and soon will have a good consistent breakout. So I feel on the downside, 769 on UPL will act as a very strong support, and the more it sustains above 780, 785, I think the momentum is poised towards 820 levels on the higher side. My another buy recommendation is on Divi's Lab. Couple of times I've recommended on the show as well that in the entire pharma pack, Torrent Pharma Divi's would be the outperformer compared to the other stocks. So Divi's again similar kind of a structure where it had seen some kind of consolidation over a couple of weeks, and now it is in the range of breaking out this consolidation. Has seen a good open interest traction since the inception of the January series. Close to 10% open interest has been built in since the inception of the January series. So I see on the downside it has multiple supports, where immediate being at 1510 and sustaining at these levels, possibility of 1600, 1620 looks on the higher side. Okay. On the FMCG pack, like Dabur, the stock has seen a good consolidation or a retracement of its pullback from 370 to close to 460 odd levels, and now has taken a multiple supportive level around 422 to 424 odd band. So the more it sustains at above 435, I believe there can be a follow-up buying momentum where 460, 480 levels can be tested. Even this stock has seen a sizable rise in the open interest in the FNO space, so that will act as a supportive action for Dabur as well.
Okay, so those are the stocks that our experts have recommended. Let's get in some of the stocks that we have spotted. The first stock that we want to talk about is obviously Yes Bank, the stock of the day. It's up almost 4%. It's trading above the 200 level. It's for the first time after November last year. The stock is again above the 200 level. Is this something that you can? It's clear indication of short covering that's coming in. So Amit, I'll start with you. Yes Bank, can the party continue?
Well, so if you see the intensity of the fall in Yes Bank since the time it has broken down from 400, the intensity has been quite massive. So these kind of pullbacks are bound to come, but I would not jump into these kind of pullbacks because still there is a long way to go for some confirmations to show some sign of reversal trend. So for me, on the upside, there are multiple hurdles and there are multiple possibility of supply coming in. So I would not be too much looking at to this kind of a short covering. Maybe for a very short-term trader or a speculative trader who are ready to take some kind of a gamble can consider trading on a very short-term basis, where on the downside it can take some supportive action around 192, and on the upside there is some room towards 220 to 225 levels on the higher side.
Okay. Nirav, can we also take your view on Yes Bank? How would you play this one? What would your positioning be here?
See, for Yes Bank, I am one person who looks at volumes very, very closely. So, looking at the volumes in Yes Bank, such kind of grouping of volumes was seen in 2013. And, at that time, Yes Bank was around 50 rupees per share. So, what happened after 6 months was, it went up to 125, and from there on, it again picked up momentum, went up to 400 in another 3 years time. So again, after for its lifetime, this is the second time such grouping has been witnessed in volumes. So, yes, short term it has witnessed selling from 400. We can say it has, come down 50%. But such grouping has come only for the second time in its history. So I believe from here, anyone buying Yes Bank will stand to gain at least double. So again, I feel 300 to 350 is only a short target, and one should definitely be buying Yes Bank. All the short-term things will be sorted out in probably next 2 to 3 months. You will be able to see a huge rally in Yes Bank, and I believe one should be buying at every dips and every month. Probably keep this stock for your SIP for the next 1 year. You will really gain a lot from here.
Okay, well, the other stock that we also wanted to address today was Apollo Hospitals. It continues to gain on high OI, and what we've seen in case of Apollo Hospitals is some strength returning into the counter. Of course, it hasn't really been, it wasn't in favor, I would say, about the first week of December, where it did come off to a certain extent, but since then it has climbed and climbed above those levels. If I'm not mistaken, it's certainly at a 52-week high or nearing that, but there is unwinding coming through in today's day of trade. So that's a curious one. Let's find out what we can expect from Apollo Hospitals, because from what I see, the relative strength index is indicating an up move towards the mark of 70, which shows the stock being overbought. It hasn't really reached there yet. But Amit, let me take up Apollo Hospitals with you. How are you reading these cues right now?
See, broadly, this stock is slightly, volatile within that range. Most of the time it will have swings on both the sides, maintaining the positive stance on the price.
Right.
Since the inception of the January series, in fact, the stock has seen a good amount of short covering, where the open interest has moved lower from close to 8,15,000 to almost now 7,15,000 odd.
Yeah.
And even today, we are seeing some heavy built in the open interest, which is increased by 14% odd. So there is some kind of a shorts which have moved out, and some kind of a fresh position which is seen at this point of time. So it has good support around 1300, 1280 odd levels. And looking at the broader structure, I believe it can, in the short term, test towards 1400 to 1420 levels on the higher side.
Okay.
Okay, so that's the view on Apollo Hospitals. Let's get in the next stock that we want to talk about, and that is Motherson Sumi, one of the top F&O gainers. Again, brokerage note coming in terms of Kotak, which cut the target price and is still cautious on the counter. Nirav, what should one do with Motherson Sumi? Are you as cautious, or is this a buying opportunity?
No, for trading perspective, yes, I am a little bit cautious still. I believe it can come down towards the 145, 150 levels. Having said that, most of the indicators are in the oversold zones. Also, there has been volumes coming up again at 150 odd level. So, yes, for short term, probably it can go down. But, for a medium term perspective, I will not be a positional seller in this. Probably, sell it at this level, keeping a stop loss of 165 odd, and a target of about 150 to 145, and booking profits there, waiting for some more volumes to come in to go long in this counter at the lower levels.
Okay. So that's coming in on Motherson Sumi. Now there are a bunch of IT stocks that we want to address. One of them is from the mid-cap space and the other one is from the large-cap space. I'll take up HCL Technologies first. And the reason is because we also have a viewer query, if I'm not mistaken, but also because we've seen a brokerage downgrade for HCL Technologies this morning. We have Morgan Stanley downgraded to underweight. Now there were some concerns which had been raised when it bought a bunch of products from IBM, and since then we really don't know how the company is going to provide for the amortization. That said, there's also this question of possible impact, adverse impact on margins, as we have seen in the case of TCS and Infosys, and that is something which is also playing against the entire information technology sector. HCL Tech has come off from levels of around 960, 970. It's currently at 940 and has weakened over the past couple of months. Today, it isn't doing anything much. We have a question from Ram Hegde on Facebook, and he wants a view on HCL Technologies, keeping in mind the February futures. So let's take this one up. Nirav, I'll come back to you on this one. How are you reading cues on HCL Technologies, especially keeping the February futures in mind? And what would you advise the viewer to do?
Yeah. See, this is one stock in the IT space which is continuing to make a higher top, higher bottom formation in the longer term charts. Its previous bottom is around 890 odd levels. Now, unless that is broken, my view in HCL will continue to remain positive. Every time it makes a new top, it comes down by about 15 odd percent and again, starts to move up. So it is now nearing its support zone of 920 and 890. These are two very important support zones. So I believe one can buy HCL Technologies at this level, keeping a stop loss of 920 or 890, whatever one seems feasible for one. Also, I believe it can come up towards 1050 and 1100, 1120 odd levels probably in the next 1 or 2 months. I believe the selling seems to be over in this stock, and it should come up pretty soon.
What's your view on Castrol? That's another stock that is buzzing in trade. Nirav, can you take a look at Castrol?
Yeah. See, after a long time, Castrol has witnessed, buying. Generally, what really happened was every time it witnessed buying, in the same week that selling used to set in, and it would again start, end the week where it started. So. For a Castrol, very difficult to predict if, in this week it will end at 165 or above. It has witnessed a breakout above 157 odd levels. So I will believe, until 157 is closed below, one can buy this stock at current levels as well. The volumes, though, are missing. Yes, I believe the weekly volumes are done, but I really need aggressive volumes on a breakout, for a particular stock to sustain. And those are missing at this moment, but we still have about 3 days for the week to end. And I believe those should come in again. The indicators like RSI have indicated positive divergence, and I believe looking at the overall picture, the stock can come up towards the 185 190 levels. One can buy at current levels with a strict stop loss of 157. Even if it goes below 157, I would still suggest exit.
Okay, well, I was actually going to take up, those mid-cap IT stocks as well. So one of them is NIT Technologies. It's not really doing too much in today's geography, but there is some sort of accumulation open interest. We're expecting its earnings this week. The other one is KPIT Technologies. Again, this one is buzzing largely on account of the fact that we are expecting earnings today. Well, the real question and the reason why I wanted to pick up on these stocks is because they have been outperformers through the year of 2018, perhaps not only with respect to the Indian IT index, but also perhaps a lot of other mid-cap counters in general. Now, of course, there was some temperance that we had seen towards the end of the week. Amit, let's talk about perhaps NIT Technologies first, because that clearly is seeing some additional accumulation. How are you reading cues here, and what would you make of the technicals?
Well, if I have to select out of both NIT Tech and KPIT, NIT Tech is something which is providing more comfort at this level.
Yeah.
If you see the trend yesterday, the open interest had surged close to 22% on a single day. So it has seen a good amount of accumulation, as you likely mentioned. So for me, NIT Tech is looking much stronger at these levels. On the downside, it has made a good supportive action around 1140 odd, 1160 in the near-term basis. And on a broader structure, the stock has been consistently making a higher top, higher bottom formation since its rally from 500 odd levels.
Right.
So to me, this will see some outperformance and can see this rally heading towards 1260 to 1280 levels on the higher side.
Okay. And for KPIT, of course, as I was talking about, we've seen a little bit of, actually a lot of consolidation over the last 3-4 months for that matter. Do you think it's due for a big move upside or downside?
So, well, this consolidation, if I look from a broader pattern, it is converting into an inverted flag, where it has broken down from 310 level from to 190 odd, and with 190 to 230 odd band, it has seen some kind of consolidation. So now looking at the broader picture, it is now near to its support, which is close to 200 odd on a rising trend line.
Okay.
So if it breaks that, I feel that there can be some pain in this counter. So unless and until on the upside it is not crossing 240 on a sustained basis, I would avoid this counter.
Okay.
Okay, before we end, is there any stock apart from the ones that you recommended, Amit, that is catching your eye?
So a couple of stocks. One is Infosys, the stock. In fact, in the entire IT space, I believe Infosys can see strong outperformance in coming 2 to 3 months time frame. On a broader structure, it has given a phenomenal breakout, and the more it sustains above 700, I believe the soon it will take the all-time high level of 750 and trade higher towards 800 odd levels on the higher side. The other counter on a very short-term basis is Reliance, where I feel the stock is now coming out of this narrow consolidation and the lower band.
Right.
A good support around 1100, 1110 odd, can see some pullback towards 1160 to 1180 levels.
Okay, so we'll keep an eye on Infosys and Reliance Industries. Well, that's what we have with respect to some of these counters. Nirav, anything that stands out for you?
Yeah, there's one counter called Stride Shashun. I've been speaking about the same, I think, on every show. It has witnessed a breakout now, after a long time. It has witnessed a volume breakout at 480 odd levels. A good session yesterday it had. I believe it can still continue to move up towards 550, 570 odd levels. Good volumes as well. So one can buy even at current levels and on dips towards 510, and keep a stop loss of about 502 and go long for a target of about 550.
Okay, that's all the time we have for in our show today. Many thanks to Amit, many thanks to Nirav for joining us and helping our viewers make the right choice. But for more updates on the F&O space, you can also check our website, bloombergquint.com, where all the information on the F&O markets are available. But with that, it's a wrap on this edition of the F&O show. From Agam, me and the entire team making the show. Thanks for watching, but stay updated with Bloomberg Quint. Stay tuned, because all the news and updates will continue on this channel.
Over.